This episode of the podcast is brought to you by Franny's Pharmacy.
Now more than ever, it's important that our society focuses more on our mental and physical health. At Franny's Pharmacy, the team is committed to their community's need of being happy, healthy, and stress-free. Come learn how Franny's Pharmacy can assist you in a clean, professional environment with their expert bud tenders that are excited to educate you about the benefits of their lab-tested, DEA-certified CBD products. Franny's Pharmacy also offers wholesale and franchise opportunities. Visit their website at frannysPharmacy.com, and that's pharmacy with an F, and use the promo code CannaConnect10 for an exclusive Cannabinoid Connect discount. Again, that's Franny's Pharmacy with an F.com and use the promo code CannaConnect10 for an exclusive Cannabinoid Connect discount. Franny's Pharmacy, putting the farm back into pharmacy. Mr. Gary Santo, how are you, sir? Welcome back.
Hi, thanks. Good to see you again, Kevin.
Can you believe I was just looking, prepping for this conversation, and the last time we talked, it's been over a year, March 2021. And looking at where Tilt was then and where they are today, it's like light speed because of the things that you guys have been doing. So I think that this is a good foundation for this episode is to talk through, because I believe you were just started in the role of CEO at that time. Is that right?
I was in the transition period. It officially was starting in June, but we've been working on a succession plan with the prior CEO before that.
Got you. Okay. Well, yeah, that's a good place to kick this conversation off let's talk about not only the company milestones that y'all have seen in the past year, but, specifically your accomplishments as CEO and leading this ship.
Sure. Happy to dive in on that, and feel free to stop me at any point because I can sometimes get on a roll. I think when we set out in the beginning of 2021, we knew we had a new strategy. It was, I think, the third iteration of Tilt in its short life as a company on a publicly traded exchange, and what was going to make Tilt different? What was Tilt particularly good at, in terms of looking at its different business lines? And we did a pretty deep dive the year before in 2020 to figure those things out. We had to shed a business line along the way, but really focusing on brands, a CPG strategy, and sort of that B2B, leaning into wholesale in a different way. And I think at that time, we were one of the only companies really talking about brands other than our own and talking about going B2B as intentional, not as just a byproduct of everything else we were doing. Fast forward to the end of last year, and almost every MSO out there is talking about brands and trying to figure out how to do brands. They talk about the breadth of product that we've been working on. So we tried to make sure it wasn't always going to be about the most ultra high priced, super premium products, that there was going to be a need to have products, not only in different form factors, but different levels of quality, different levels of price. As long as it's consistent, how do you bring the product to the market? So, I look at what we've had to put in place as a team, and it's remarkable. I was reflecting on that earlier today, and we have been moving really at warp speed, flying the plane while we're trying to build it. And it's probably one of the more overused terms in cannabis. But part of the issue, I think, is a lot of these companies, Tilt included, came to the market really via either a SPAC or a reverse takeover. They never went through that IPO discipline to put all the internal systems in place. So it's great to talk about the partnerships we've done and the strategy we put in place, but there's a whole bunch of plumbing that goes into being a publicly traded company, from controls to reporting structures to just having the right team in the right place and understanding disclosure rules and all those kinds of things. And I think we spent almost as much time doing that in the background, stuff you never see press releases about, as much as we spent time doing the front-facing stuff. And, we entered 2022 now as an SEC registrant. So I think we just filed our amended Form 10. So we are in position A when and if we ever get to uplist. We're putting in all those controls that will make us ready to go.
Congratulations.
At the same time, we moved. Thanks. We moved to one of the senior exchanges in Canada as well, the NEO exchange, sort of as a precursor. They have a lot of the same requirements that a NASDAQ might have. So I think it put a good sense of discipline on the team. So all that internal plumbing behind the scenes, while at the same time trying to navigate the cannabis marketplace with all the change and the turmoil we've seen. So, we're fortunate that Tilt's got a lot of really strong bones. That's what attracted me to the company. being able to lean into our plant touching assets. And I could talk a little more about our brand strategy there. But then also on the hardware side, Jupiter Research, which is our inhalation and accessories group, and really starting to get those guys back in the lab where they belong, innovating and creating new and different IP. So yes, we're a distributor of C-cell technology, that's ceramic vaporization coil. But at the same time, we've got a full-blown lab that is responsible for not only making improvements to C-cell design, but also starting to create some of our own products that you might see come to market later this year. So let me pause for a second, see if there's any place you want me to kind of dive into deeper.
No, yeah. So, I mean, that's exactly what I want to do. So that's a perfect kind of high level overview, of where you've been, where you've come, and kind of some of the lessons that I've learned and the opportunities that you've seen that you've seized, right? So let's get into it specifically. So let's break it down first with organic growth. I mean, the numbers speak for themselves. I think it said under your leadership, the annual revenue grew by 28% to 203 million in 2021. More than tripling your annual growth. So let's talk about that first, and then we'll dive into maybe some of the brands that you're helping and working with, and then so maybe some of the other strides that you're making within social equity.
Absolutely. So you are right. Everything we've been doing for quite a number of years now has been all organic. The company really hasn't added any new assets in a long time. We did have a call option on our Ohio manufacturing facility that we picked up the middle of last year. But outside of that, it's been more about really activating and going deeper in our existing markets. If you go back to 2020 maybe, I think the company's vision right there was to lean harder into the hardware division, so Jupiter, but then also into a software division we had, and they were really shying away from the plant. We were lucky that we had great operations in Massachusetts and Pennsylvania, which were supply constrained markets. So we were growing good flower and really able to go and sell that flower in a very I would say it was competitive, but not ultra competitive. Certainly nothing that rises to the level of Colorado, Massachusetts. Fast forward to today, a lot more grows have come online. Competition has gotten a lot stronger. So as we look at how to gain market share, especially in a state like Massachusetts, where you only get 3 retail stores, it's got to be about that wholesale play. But what are you selling? If you're just selling bulk, and that's something Tilt did really in 2020 into early 2021, about 80% of all flower products we sold were bulk flower, bulk distillate, whatever that was, pivoting that to really get to 80% consumer packaged goods. So as we started to ramp that up, we discovered that really we needed to improve our grow so that we could be a lot more nimble. Instead of growing a few strains really well, how could we be introducing new strains every month to the extent possible? How do we reboot some of these gardens and really go from in the state of Pennsylvania, where we're only getting about 7 or 8 grams per square foot out of our greenhouses of smokable flower? How do we pump that up to something more norm, like a 40 or 50 grams per square foot? That means rebuilding the team, bringing new folks in. And what's been really exciting and humbling are the people who have come over from other MSOs, embracing our strategy, saying that, wow, you guys really get what we would like to do in this industry. And they're excited to make a run of it. And I know we're not the biggest out there. And I know compared to a lot of the other guys in terms of balance sheet, there are some challenges here and there. But when you start seeing people come over from some of these other MSOs, from the Crescos, from the Trulies, from the Columbia Cares, and so on, really good shops, it makes you feel good that you've got a strategy that makes sense, that people are seeing the vision here, and you got people who know how to execute. So, that's really what you saw us do in 2021, lay out a vision and then go for it and improve our execution every step of the way so our margins would improve. And really you saw true organic growth. And even what we're projecting for this year, 2022, it's from the same existing assets. So think about that Pennsylvania greenhouse, right? I'm getting 7 to 8 times more production out of the same footprint with the same number of employees and the same overhead. So it's the definition of organic growth.
Right. Yeah. I mean, of course, you may not be as big as the other MSOs, but your differentiated approach really is a huge value add, right? I mean, the fact that you're focusing on wholesale and becoming the partner of choice for brands that are, entering in different markets, particularly the East Coast, right? And so let's talk about those brands that you're helping and that you're building with.
Yes, I mean, hats off to Jupiter for having the kind of relationships it does, right? So Jupiter sells its hardware either in a true bespoke fashion, so truly customized. It could be a white label where we take one of our stock products, and maybe we rebadge it or change the color a bit. Or you can take one of our house branded products, the Jupiter products, but really creating relationships with independent brands, with the MSOs, and even the Canadian LPs throughout the organization. And that's been done over what, 3, 4, 5 years, where now they're selling in about 35 states and 15 countries. It gave us a bird's eye view for how brands perform in different markets. And as we looked into the hyper competitive space like California, Oregon, Washington, and Colorado, identifying brands who avoided getting caught up in the race to the bottom on pricing, brands that had a very thoughtful and intentional architecture that we felt if we could bring those east into a market that really isn't quite as evolved as, say, the California market, there would be a tremendous amount of runway for these brands to get their foot in the door, start to establish who they are, and then just start rolling out some of their existing products. They can almost go backwards a little bit with their developmental catalog because the East Coast wasn't quite ready just yet. I think the challenging piece to all that, though, is as we looked at those brands, there's just an assumption that when you find a brand that's successful and very successful in a market, the hope there is they've got a firm handle on supply chain, they've got a firm handle really on their sales metrics, and some are better than others. But when it comes to scaling and now bringing that across the country, pretty much every single one of them, they face some challenges. And traditionally, when they've tried to do that, other MSOs either wanted to buy them, would sort of make them captive. So sure, I'll bring you east, but you can only be sold in my stores. And then left them fighting really for relevance amongst those same MSOs, because every one of those shops really had a pretty high vertical, a pretty high set of margins they were trying to cross over. So anytime they had to hit their numbers, they were always going to lean into their products first with what they put on their shelves, how they allocated biomass, how they allocated their workforce. So there wasn't really a clear path. And we certainly saw some try to go the licensing route, where you just pay a fee for the license, the name goes across the country, but then you find the SOPs drop off, and the experience that you have on the East Coast is so different from the West Coast. Other than the name and the logo, it's not the same thing at all. So finding those brands with a deep architecture, identifying them, and then working with them on the product development side to really educate them on the regulatory environment, how different Massachusetts is from California, medical only markets in Pennsylvania or Ohio, and how to really bring those brands over and still maintain the fidelity, even though you might have to change your packaging, your taglines, your form factors, and so on and so forth. So it became very collaborative very quickly. And I think that started to set us apart, because as the brands worked with us, we would constantly hear, hey, our other manufacturers aren't asking these questions. And at first it was uncomfortable because they were challenging us. But I think once they saw our expertise in our markets, they embraced it pretty quickly and suddenly became our strongest ambassadors. So as a result, fast forward to where we were down at a few conferences earlier this year, and we went from having to make all those outbound calls to attract brands to now the phone's ringing. And for us, it gives us a chance to really think through our architecture, because when we think about the brands we work with, besides having that nice, deep brand presence, we're also looking for brands that complement one another. So if we're going to go after that part of the shelf space that MSOs typically dedicate to third-party products, we want to see if we can own that whole shelf space by having the widest possible variety. So you don't need to go and curate that portfolio on your own. And by staying asset light with these brand partnerships and not trying to own the brand or develop our own, if one of the brands is not working out, if maybe it's fading a little bit, they haven't done innovation, they're not out in the market and really pushing their brand, we can move from one brand to another. And the way we allocate our biomass and the way we allocate our people, the brands that are moving are the brands that get the allocation, which means even our own brand, Standard Farms, may take a backseat every now and then. And I think it's a really unique approach. It's got us 8 brands signed up already. We've activated probably about 30 to 40 SKUs in the market. We have about another 50 or 60 to do before the end of this year, because our goal is to get all 8 of those brands fully activated in every region we can. But the other piece then is looking ahead to where else can we go, because these same brands are asking for help with managing supply chain, something we know how to do with our eyes closed from Jupiter, how to bring in packaging from China, how to warehouse it and be able to distribute it in a timely basis, so you're not playing this stock out game. So ways for us to get deeper in our relationships. And to me, the proof was when we looked at our cross-sell. We started the year with about 20% of our revenue coming from customers of both our plant touching and non-plant touching sides. They'd buy the hardware from Jupiter, bring it into our states that we have cannabis operations. We'd fill it, cap it, package it, and then distribute it for them. By the time we got to the end of the year into this year, we're closer to almost 50% of our revenue coming from fully engaged customers. So it's about as vertical as you can possibly be.
Yeah, I mean, it is a unique approach. And with the lack of interstate commerce due to the federal illegality of the plant, and if you don't have an appetite to be acquired, I mean, it seems like Tilt is the best option, right? Because you guys help in the process of expanding into other states, and because you have the knowledge and the know how to do it. I mean, you have the experience with all the different clients or brands that you work with. And so speaking of those, I understand that there's been recent partnerships that you've launched. Do you want to talk specifically about some of those new partnerships?
Sure. I think when you take a look at brands that we brought on board, so just this year, so we brought on board Timeless and Toast. We'll be activating them a little later on. Black Buddha, social equity brand. I think, Roz has an amazing construct, the way she sees cannabis and how it fits into your everyday life. I think it's not quite medical. I think she goes for experience to a certain extent. So she sort of bridges that gap. And then the most recent one was Heisman with Ricky Williams, obviously very active in the cannabis space, unbelievably thoughtful. I think a good chunk of our leadership team can trace their origins in the industry back to having seen him speak somewhere, which really astounded me. I didn't realize that until I was sitting in a meeting with him and we were talking about what a partnership would look like. And our head of marketing, came straight out and just said, it was Ricky's story that really got me involved. So not a celebrity brand, but really a deep architecture, trying to come up with something almost like a Gatorade, trying to line up experience, trying to line up the strains with where you are in your given day. Again, trying to incorporate flower into your everyday life and not make it so episodic. So it's a common theme throughout all of our brands. If you think about Old Pal, one of the brands we signed last year, lifestyle brand, very basic along those lines, very consistent quality. And they know what they're good at. They're not trying to be everything. They're sticking to what they're good at. 1906, who we signed last year, and we were activating in market. We actually finished a production run about a month and a half ago. We're finishing up packaging. So Ohio and Pennsylvania will start to see some 1906. Very focused on having their drops, the experiences, the mix of THC and CBD together with some botanicals. You think about Her Highness. So they go for more the fun side of cannabis, right? They're the cannabis female couture type of a brand. Right. Very high end, very elegant looking, both in their packaging and just in the design, the long crutches, and really designed for the female in mind. So, you kind of go through, and then Arrow, which is one of Jupiter's oldest partners, really, who, they have a single device that they license from us. It's a pod device, basically a closed loop system, but they do a lot of custom blends on their concentrates to sort of match it to the technology itself. So that this way you're really fine tuning the tech to work with the concentrate. So again, all very intentional brands, all operate in slightly different areas. There is going to be some overlap. There's no doubt. Everybody wants to do a pre-roll, including ourselves. Everybody wants to do, something in the form of an edible, but they're really smart at wanting to stick to what they're good at. And if they do take a flyer, it's just to say they have it. It's not because they're really diving into it deep. So they've worked incredibly well together.
Yeah, it sounds like a really impressive, brand portfolio that you're working with there. So we've touched on organic growth. We've talked about, the brands that you're working with and some of the new partnerships that you've launched. Let's talk about operations. What is Tilt doing to strengthen its operations, and how has it strengthened its operations in the past year with you being CEO?
Yeah, so we basically rebuilt the team. If you go back to Tilt in 2019, when it was coming out of its first change, when the original founding leaders left the company, and then really some of the folks who led the companies that were purchased by Tilt stepped into the void. So Mark Scatterday was my predecessor. He hired me, and on one of our first meetings together in person, he said, "I think I'm looking at a succession plan." So we maintain a really close relationship. He's the chair of our board. And, he stepped in. He's the founder of Jupiter. Very, very smart man, has brought a number of companies really to the edge and then sold them off. This was his first foray into being a publicly traded company. But what he knows how to do is bootstrap a company and get them back to basics. So when we exited 2019, we might have been the only MSO really funding our operations out of cash flow from those operations. We weren't working through money we had borrowed or things like that. We had a very simple capital structure. That meant that really the team sort of atrophied a little bit. We weren't really focused on growth. So when you think about the kind of people you would need and where you would deploy them, we really weren't looking at that. It was more about staying super, super lean and staying afloat to get to stabilization. And that's what they did phenomenally well, and created the foundation that then last year to this year, we've been able to build off of. So bringing in those team members, completely shaking up on the cannabis side and having a new head of cannabis operations, David Catanzano, a colleague of mine from Columbia Care. bringing in new cultivation. We had some good promotions from within, from our processing labs and kitchens. So it allowed us to really take a fresh look at our facilities. And, they have been profitable almost by accident, in the sense that there wasn't a lot of resources being put into them after they were built. You were in supply constrained markets, so it was easy to sell flower, but the capacity and the ability of the teams and those facilities to produce unbelievable high quality flower in great quantity wasn't even being challenged. I think Massachusetts, we were growing the same 2 or 3 strains for 3 years, which, as good as those strains are, you need to have some diversity there.
Right.
So really just rebooting the gardens, being much more intentional with how we are looking at product, not just grabbing everything and selling it bulk, having an idea of where every single plant is going to go before it actually pops, from a seed, and knowing how to manage the workflow. And on the Jupiter side, as I mentioned earlier, it's about just getting back into the labs and starting to work with the manufacturer that owns that C-cell technology, Smoore, out of China, and really working on understanding the marketplace. They had a great disruptive first mover advantage when Jupiter helped bring them into the cannabis space back in around 2018, but they hadn't done a lot of great innovation since then. And it really had fallen out of touch, I think, with the market and where vaping was going. And a lot of the knockoffs caught up. So being able to work with them collaboratively, educate, and come up with a much more aggressive product infrastructure that I think will resonate in the market much better, because it's, again, very similar to our cannabis portfolio. It's trying to have a piece of hardware at every price point, quality point, and basic form factor that you can possibly have.
Right. Yeah. I mean, I'm glad that you also talked about some of the external and internal hires that you've recently had. And it's a good segue, because I want to talk to you about new talent coming in the industry. Matt Hawkins from Entourage Effect Capital and I had this, we touched on this in an episode that I had him in. And he was saying from his perspective, not being a CEO, but he's seeing this talent just coming in, and just different CEOs of high caliber from various industries. And so, I mean, are you seeing that? I mean, you're a CEO hiring, right? So what's the trend been like in terms of new talent entering the space?
So I think what's interesting is you're starting to have a little bit of a luxury as an employer, in the sense that, when you were first starting out early years, you go back to 16, 17, 18, during the initial green rush, you probably attracted people who knew how to raise capital, but probably didn't have big chops when it came to building out a true operating entity. And because you can't cross state lines, you had the benefit of never even having to try to integrate your operations, because you couldn't integrate your operations, right? So I think it gave them a little bit of runway. But I also think that's why you saw that massive reset in mid-2019, because you saw all this money being raised, all this M&A being done, lots of top line revenue, and no pathway to profitability. It was just on to the next shiny bauble. What you're seeing now are operators stepping into the space, but then also people who've come up through the ranks over the last 3 or 4 years within the industry. So now they even have the cannabis functionality too. Because when I first got into the industry, one of the first people I met started with, so how long have you been in the industry? And you could just tell, having grown up in the finance world, I spent 16 years of my career in finance. We had the same kind of thing. It's like,
who's this new guy? Who's this guy entering our space, right?
Exactly, right. And he doesn't understand the plant. He doesn't understand, that it's a much different thing. And you look at this and say, guys, this is actually an industry that is made up of 3 key industries that have very long tentacles in the space today. You got agriculture, specialty manufacturing, specialty retail. Every one of those is difficult enough to run. We put them all together. And then if that wasn't enough, we go up one more level and we say, hey, we're also going to make the regulation so you can't do a typical hub and spoke. You have to set up individual companies in individual states if you touch the plant. Good luck and God bless. So, I think from that perspective, it's challenging, but there's a path. And anybody who tells you budgets don't matter in cannabis, they're not going to last very long. Of course they matter in cannabis. They matter everywhere.
Right.
That basic business fundamentals don't matter. Now, flip side, it's kind of on us on the business side to pay attention to what our cultivators are saying and our processors are saying too, because we're not making widgets. We're making something that people are putting into their bodies. We're making something that fits into a lifestyle and narrative that predates all of us, at this particular point. And how do we step in as responsible stewards? So, I'm definitely seeing a lot more operationally focused talent stepping in, people who are more than just curious. I think those folks have already weeded themselves out of the program. It's nice to be enthusiastic about flower, but there is still a business here. Otherwise, you do run into that problem where the greatest idea gets torpedoed because there was no business sense to keep that idea going. And,
Right.
you can't help social justice if you're sitting on the sidelines bankrupt.
Right, exactly. No, that's perfectly said. Couldn't agree more. Speaking of social justice, which is, associated with social equity, is there, anything that you want to talk about in terms of strides that Tilt has made on the social equity front?
Yeah, we've been super focused. I've got a great team, that's very heavily invested in this, because we believe, a lot of the social equity work we were doing when I first got here was done in the grassroots level. So we were making all the typical donations, Last Prisoner Project, and all the local charities that you might expect. We were helping work on expunging records. We were doing a lot of local grassroots stuff, as I mentioned, but we didn't have that top-down directive. And I think to make a real change, to really stake your claim in this, you've got to have it at the top of the organization down, whether it's the DEI pieces, whether it's the CSR, any of these things, it's got to start at the top. And we put together a great team for that. Daryl Henderson, Lynn Ricci, who's our head of investor relations, people who have a history of working on these types of programs and not just giving it the lip service. So as we started to look into places we can make a difference, we just announced a partnership with Last Prisoner Project directly. We were already working with them tangentially. Her Highness does something with them. One of the products we actually do for them, a portion of the proceeds go to Last Prisoner Project. But I think that was important. But probably the biggest place where we took a step forward was our partnership with the Shinnecock Indian Nation out in Southampton, Long Island. I grew up on the island. I used to go out to their festivals every fall. So
wow,
when
that's
an
so
investor,
awesome.
I know,
It's like
so
full circle, right?
Totally, circle of life. It's like the Lion King. So when I heard through an investor that they were looking to get into the space, because they really didn't do anything on the casino front, we look a little deeper and we found out that they were so intentional that, frankly, as a business partner, they were unbelievably pragmatic. So since 2015, they saw the opportunity, and sure, they could have started selling cannabis and producing cannabis on their sovereign land right away. In fact, a number of other Indian nations are doing that. But they saw the longer term play was to interact with New York State and be able to sell product over the state lines through wholesale, not just have a dispensary on sovereign land that people could come to, but be able to reach out. And to do that meant building your program in a way that it complemented or ran right alongside New York State. Took a little bit longer, a lot more involved, but I was incredibly intrigued by that. And as a result, we ended up signing a partnership where we will fund and we will help build out the operation, which will be a 60,000 square foot cultivation and manufacturing facility, about 3,000 square foot dispensary right on Montauk Highway, and then there'll be a wellness lounge attached to the dispensary. For us, providing the expertise and the horsepower and really training whoever wants to join us on this journey. So Sinead Bullock is the general manager and CEO of Little Beach Harvest. That is the name of the Shinnecock's cannabis operation. We made a pact that we will do everything we can to hire as many of the folks who live on the sovereign land first. We're hoping to hire at least 100 as we think about how to staff it, knowing that we're going to have to train them from the ground up. We had them tour our facilities and show them that a passion for the plant gets you only so far, but this is real life manufacturing. There's security protocols. There's all sorts of things that need to be considered. So the best part is this thing starts out as being owned by the Shinnecock. When we are done building it, it will still be owned by the Shinnecock. We will provide management services. So, we will have our opportunities to get paid back what we lay out and also make some profit there. But ultimately, this isn't one of those typical MSO deals where we fund it, we build it, and then somehow a year later we take ownership of it. That's not the way it's going to be. And if we do our job right, then we will continue to be doing the job for them as a management services provider. So I think it's a great way to really step forward. I could not be more proud of the team and our board for willing to take that kind of risk, because not everybody would sign a check for up to 18 million to build something you're not going to own. But it feels like the right thing to do, and people have taken notice, and we're starting to see similar programs trying to come to light here and there throughout the country.
Yeah, I mean, it's an amazing story, and it's true social equity, in my opinion, right? Because not only are you're actually helping, you're educating, these people to operate in an industry that is highly regulated and difficult to navigate, right? I mean, highly capitalized, just so many barriers. So the fact that y'all are arming them with knowledge and education, it's great.
Yeah, I mean, what always gets me about a lot of the social equity initiatives that you see throughout the states, and Massachusetts has been trying on social equity. I think the folks who wrote a lot of the regs wish they had a second bite at that apple, because it's one thing to give somebody the license and say, okay, here you go, here's a license, go for it.
Right.
When you realize how hard it is just to start a business in Massachusetts, a normal business in Massachusetts, forget about cannabis, just a normal business, you need funding, you need some talent there, you need to have some direction on how to navigate regulatory and legal hurdles and put the kinds of insurances and securities in place on top of be good at whatever industry it is you're trying to set up.
Right.
You add in cannabis and the level of difficulty is through the roof. So you throw these people into the deep end of the pool, you hand them a license, and then you say, good luck. That's not social equity, not at all, you know? And no, you can't wipe away 100 years of prohibition with one piece of legislation, but you can put a framework in place and work together collaboratively, because there's enough margin in this industry to go around for everybody. You know, we're not supposed to be making 70, 80% gross margins. That's a first mover thing. You know, we're not software. So there's plenty of margin to go around to help everybody and really have a responsible ecosystem that you can set up. And I think about the Shinnecock, this might be one of, you know, there are a few businesses right there on sovereign ground, because they don't get tax dollars to plow their roads and to pave their roads and do all those kinds of things. They have to generate those funds on their own and provide those services on their own. This could be a real self-sustaining economic machine for them.
Right. Love it. No, I mean, it makes complete sense. I'm totally with you. And I love the approach that y'all are taking with that. It's great. My last question as we wrap up, Gary, is, you know, just talk about upcoming launches, goals that you have moving forward, and perhaps maybe in a year or maybe even 6 months from now, when you come on again, we can talk about, you know, where you've come.
Yeah, I mean, for us, like I said, activating our brands. So we tend to do brands in cycles, where the beginning of the year we signed a bunch of brands, then we try to activate them all by the end of the year. I think it's a much more fluid pipeline there, and our head of corp dev is always telling me I'm drowning. But you know, I think Christina Di Tomasi, who also came over from Columbia Care, has done an unbelievable job finding brands, getting them signed, and getting them activated quickly. She's put together an unbelievable SWAT team that has regulatory components, marketing components, you know, production components. So this way they can service the brands in sort of a very white glove approach and start to bring them into the world of metrics and understanding where your what a sell-through looks like. So I think getting those brands fully activated, all 8 of them, and I think we'll exit the year about 100 SKUs all in will be activated. I think that's going to be big. We look to be breaking ground on the dispensary in Shinnecock in the not too distant future. I think our hope is to get that built and operating before the end of the year, while cultivation is still being built in the background. Working closely with New York State to try to get a memorandum of understanding. Right now, there's nothing that explicitly prohibits a New York MSO from selling wholesale onto the Shinnecock sovereign lands, but there's nothing that says you can do it either. And I think all of those operators don't want to risk their license, and rightfully so, especially with adult use so close, you know, having an accidental footfall. So trying to get that memorandum of understanding that will allow the wholesale to flow on and off would allow us to kickstart really the revenue generation for the Shinnecock a lot sooner while we finish the cultivation site. So I think those are some of the more immediate terms. You know, from a business perspective, we're doing a little bit of balance sheet cleanup right now. We have a piece of debt that comes due in November. We recently did a transaction with IIPR for our Massachusetts and Pennsylvania properties. So we'll be deploying that capital to settle up that old debt, and then most likely amend and extend what's left of the remaining debt. So we have a nice clean capital structure going forward. And then the really fun stuff, you know, as much as I love sweating the assets we have now, and I think we have a lot of room we can still run, starting to look out more broadly into other places we can go. You know, with all these brands wanting to work with us and telling us, look, get into this state, I'm there with you if you can do it. Suddenly states like Illinois, Michigan, Missouri, Florida start to look more interesting to us, where before we were trying to stick to just a Northeast corridor. I think this gives us a chance to think more broadly. And, you know, generating cash flow from operations, watching that cash start to build up, and seeing so many of these deals not requiring quite so much cash to get done, I think gives some interesting opportunities, you know, to shops like us to maybe do some good things.
Yeah, I mean, absolutely. It's evident that you guys are super hyper focused on what you have ahead of you, what you need to get done, and you know, you're moving forward. And I just really appreciate you sharing, you know, all the milestones that you've seen throughout the year, you know, personal successes you've seen as CEO of Tilt Holdings. And yeah, Gary, I mean, let's do it again really soon as things continue to evolve and y'all continue to grow and expand your footprint.
Absolutely, happy to do it. It's a great story to tell. It's one that I think is very different. It's not one that immediately everybody gets. So I know it takes a couple of times telling it, but we're always happy to talk about the things we're working on and where we think the puck is going next.
Absolutely. Well, yeah, man. Thank you so much. Where can people find y'all's website and social media if they want to learn more?
Sure. On the website, it's www.tiltholdings.com. And I am horrible at social media. So I know we have Twitter feeds and I know we have, I think, Instagram as well, but that's something we're actually rebooting. We just got a new head of social that joined Lynn's team, as a matter of fact, and they're working on a whole social strategy for us because I think there's a lot of work we could be doing there. We're not as present as we could be, I think, on those platforms.
Awesome. Well, hey, we'll be sure to put the links on the bottom of the description box for YouTube. But yeah, man, until then, keep blazing the trails, keep spearheading what y'all are doing. It's a unique approach and it's working. So thank you so much again. And thank you all for listening.
Thanks, Kevin. Great to see you again.
Yep. Bye.